Is the wheel strategy the best strategy for you? Wrong question. The right question is, who is it actually built for? Almost nobody explains who should never use it. Let's start there. The wheel works best for someone with enough capital to hold several uncorrelated positions at once, someone genuinely fine owning the underlying, and someone who measures success in months, not in Friday's expiration. But what happens if you don't have that kind of capital? Say your target is 8% a year from premium. On $200,000, that's $16,000. Low delta puts, liquid names, broad diversification. You don't have to force the strategy. On $5,000, 8% is $400. Correct math. Hard to build a plan around. So the target quietly creeps to 30, 50, sometimes more, and the only way to manufacture that from premium is more risk per dollar. It's not a flaw in the wheel. It's a flaw in expecting the wheel to solve a capital problem. But even with the right capital, does the market cooperate? This strategy does its best work flat or mildly bullish. It does its worst work in a vertical rally, where your calls cap the upside right as the stock takes off, and in a sustained downtrend, where the premium you collected is a rounding error against the capital you're losing. The wheel isn't a strategy that beats every market. It's a strategy that waits for the right one. So even in the right market, what should you actually be optimizing for? Not the highest premium. The goal is owning the right stock at the right price if assignment happens. Everything else comes second. Is that trade-off even worth it compared to doing something simpler? Buy and hold pays with volatility. Dividends pay with lower growth. The wheel exchanges time for income. Choosing one over another isn't upgrading your returns. It's choosing which trade-off you can actually live with. And can you actually live with it? Assignment is designed into this strategy, not a bug in it. Capped upside is something you agreed to the moment you sold the call. The wheel doesn't fix FOMO. It just gives FOMO a very specific, well-documented trigger. But does it survive contact with real friction? Collateral has an opportunity cost. Assignments create taxable events. Option taxation changes by country. Spreadsheet returns rarely equal real returns. So, given all of that, who do you actually learn this from? Most wheel videos fall into one of two categories. One explains hypothetical trades. The other documents real ones, before the outcome is known. Only one of those can actually be verified. If someone won't show you the position before the result, and won't show you the ones that lost, you're watching a highlight reel with a delta attached. This channel exists to close that gap. Every trade is logged before the result is known, and graded after. The trade log is on this channel. The free weekly newsletter has the full watch list, link below. The wheel isn't a premium strategy, it's a patient strategy. Welcome to the Wizolver log. Let's go collect some premium.